why isn't the Federal Reserve Bank and the government more worried about inflation? I mean, even if they think it's transitory, people are still really hurting because of this inflation, but why aren't they worried? You have countries around the world that are starting to issue warning signals about inflation. You have huge hedge fund managers that are issuing warning signals about inflation. You have a huge chunk of the population that is worried about inflation, if not everybody is worried about inflation. So why isn't the Fed and the government more worried about inflation? There's a couple of reasons for that. The first reason is more on an emotional reason, because if the Fed came out and they started saying that inflation is a real problem, then people would start to panic and people would start to get really worried. And that would mean that the Fed would have to start fighting inflation. And the way that you fight inflation is by decreasing the monetary supply. So you'd have to see the Fed really start to ramp up interest rates, and you'd see them start to cut down their spending and their stimulus. And that could create a crash in the stock market and the real estate market and just a whole bunch of asset classes, because as you raise interest rates, borrowing money becomes more expensive. And now it'd be harder for these asset classes to continue having people dump their money into these asset classes. And they don't want to see a crash happen. I mean, the Federal Reserve Bank worked so hard not to stop their asset purchases because they were worried about a taper tantrum. A taper tantrum happened after the 2008 crash, because after the 2008 crash, the Fed started printing money and they started using this money to start buying back bonds, to start buying back assets, to keep investors confident, to keep investors pouring their money into the markets. But as soon as they stopped that, they saw something called a taper tantrum. It was a mini stock market crash, and they didn't want to see that happen again. And so now in 2020 and 2021, the Fed opened up the money printer and they were buying $150 billion worth of assets every single month. And they really tried so hard not to stop it, because if they stopped it, they were worried about a taper tantrum. They said that again and again and again. The reason why they can't stop this taper tantrum, even though the stock market has recovered, even though they feel like the economy is recovering, is because they're worried about a potential stock market crash. Now, relative to everything else, a taper tantrum is just this much. And so if they were that worried about tapering these asset purchases, don't you think they're going to be more worried about really jacking up interest rates, because that would cause stock market prices to go down? They're worried about creating a crash, so they don't want to see that happen. And if people were worried about inflation, if people really worried about what was going to happen, and if the Fed was worried, well, then people would panic, and they don't want to see that happen. The second reason is more of a financial reason. Right now, the United States government has something around $29 trillion worth of national debt. If you see more inflation, then the value of your dollar goes down. Now, if the value of your dollar goes down, now this debt becomes less expensive, because now you can pay back this $29 trillion with cheaper dollars. So it's in the government's best interest to inflate away this national debt, because that's the only way that they'll ever have a chance to pay it off. The United States government has to pay back some payments on this debt. It's kind of like your credit card. If you go and run up your credit card bill, you have to make minimum payments on it. And if you increase your credit card bill even more, your minimum payments go up. It's the same thing with the United States government. They jacked up the national debt in 2020 and 2021 going into 2022, and now they have to pay this money back. Well, the only way they can afford to pay this back is either raising taxes, which they're trying to do, but they need inflation to continue. That way they can continue to pay this money back with cheaper dollars. So now, what does this mean in practical terms, and what can you do? Well, in practical terms, what this means is your cash is losing value relative to inflation. So you need to do something with your cash to turn your cash into an asset that will either grow at or faster than inflation by owning something that's producing value, or own something that's going to at least maintain its value. That way it's an inflationary hedge. That way now if you start to see more inflation, you can always sell this, and now you can use the proceeds from the asset that you sold to go out and buy more assets, to buy more investments. The people that benefit from inflation are the people that are financially educated. These are the people that are buying assets, things like stocks and real estate, because now as more inflation happens, the value of your assets go up. If you would have just kept that cash in your bank account, the buying power of your cash is going down while the price of stocks and real estate go up. So when you see more inflation, it becomes harder for you to go out and buy stocks and real estate, because now the price of those assets keep going up while the value of your dollars aren't changing. Because if you just keep your dollars in your bank account, well, your dollars are dead. They're not doing anything. They're not growing. But the price of everything around you keeps getting more expensive. This is where the first thing you have to do is get financially educated. That way you can start investing your money into stocks and real estate the right way, making smart decisions. That way you can convert your cash into actual investments, into actual assets, because now you own a productive asset. When you own shares of a company, well, this company is working to produce more value because they have employees. They're trying to increase their revenue. They're trying to create new products. So you own shares of a company that's working to produce more value. With real estate, you own an actual asset. You own a home, you own an apartment complex, you own a building which you can rent out. And so now if you own a building in a good location, you'll see rental values go up, you'll see the value of your property go up, so you're protecting yourself and benefiting from inflation. This is why the people that benefit from inflation are the wealthy, the financially educated, people who understand what inflation is. Now, on the protectionary side, the way that you can protect the value of your money, your wealth, is by converting some of your dollars into some sort of inflationary hedge, something like a commodity, like physical gold, because now gold takes time, effort, and labor to mine, to produce, so it's a real store of value. Now, the thing that you have to understand about gold is that it doesn't always go straight up. You see fluctuations in the price of gold, but when people start to get worried about inflation, then you'll see more people convert their stocks or their cash into gold, and so that could cause the price of gold to go up relative to the value of the dollar as long as you see more inflation. Bitcoin can be another inflationary hedge. Now, I'm not going to go through the whole education of what is Bitcoin, how it works, and is it an inflationary hedge in this video. I've done tons of interviews with very successful cryptocurrency and Bitcoin experts. I will link a video for you in the description where I go over that. But the thing that you understand about Bitcoin is you have your risk of volatility. You can see huge upswings and downswings, and there is a lot of speculation involved with that, but it can be a potential inflationary hedge if you believe in the power and future of Bitcoin. And then you have the other inflationary hedge in cryptocurrency through stable coins. Stable coins are cryptocurrencies which are stable. Some of them are pegged to the value of the US dollar. So one stable coin is $1 US. And if you take these stable coins and you put them in the specific institution that will pay you interest, an interest-bearing institution, well, now you can earn 7, 8, even 9% a year in interest on your stable coins, and you can cash out of your stable coins and move them to dollars anytime you want. Remember, one stable coin is supposed to be $1. Now, this has its own fair share of risks. You can see your stable coin go down. You can see the institution where you were keeping your money go down. So you have to do your own due diligence. But that is another way to protect the value of your money against inflation, because now you can actually earn some interest on your dollars and you can convert these stable coins back to dollars anytime you want. So that is one way that you can store your cash as you're waiting for a place to invest it. There's one place where I have moved a big chunk of my savings as I'm waiting to invest it, because now I can actually earn some interest on my savings, and now I'm just waiting to invest that money. I own physical gold, I own some of these stable coins, and I own some Bitcoin. But before you go out and do anything, just remember that investing has risks. You are never guaranteed to make money when you invest. You might even lose money, which is why you need to always do your own due diligence and never blindly listen to a random guy on YouTube. Everything that I say and talk about is just my opinion, and so you need to make sure that you're doing your own due diligence. That way you can do something that's best for you. Thank you for watching. If you enjoyed this video, here's a video on things you need to know if you want to become wealthy that I think you love. And while you're at it, download our free guide on investing your money in the stock market. And as always, keep hustling. Do you think that cryptocurrency, Bitcoin, is the future? Is that a way for someone to now build wealth quickly?
Well, it is, but it's highly valued now. I have a 3% allocation in Bitcoin in my own portfolio. I have 5% waiting